Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Director of Consumer Education and Advocacy for Experian. Madam Court Reporter, thanks for joining and being here today. If you have questions about credit reports, credit scores, fraud and identity theft, any of those things that we might be able to help with and answer the questions and have a dialogue about, we want you to ask because I want to help you get the information you need. Ms. ED4, thanks for joining. Just so you jump in, always good to have you. And this is all about having a conversation and talking to one another about credit reports and credit scores and things that affect our life every day. So important that we learn from one another and share information to help you be more financially healthy, more financially successful. That's why we're here. So if you have questions, please ask. Been interesting. I just came back. I thought I was going to be late. I just had lunch with my mom and dad. Try to do that once a month or so. So had a nice lunch with them. I won't get to see them again until after Christmas. So wanted to make sure I did that. Novio, thanks for joining. Sean Bracken, thanks for being here. 52577, thanks for joining and being part of the Credit Chat. Please feel free to ask any questions. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern, to help answer your questions. So it's an open hour, 30 minutes, not an hour, generally 30 minutes. Sometimes I run a little long, when we have some really interesting questions and a lot of conversation, so which I love. So feel free to ask if you have questions. I know other people have the same questions too, and we can help more people by sharing more information. You can learn more about this chat and our Twitter chats that we have on Wednesday at ex.pn/creditchat. We have great conversations with lots of experts about personal finance issues. Next week, we're going to be talking about New Year's resolutions around credit. So that should be a lot of fun too. Next Wednesday on Twitter at 2 o'clock Central, 3 Eastern. So hope to see you there too. DePalgos 30, thanks for joining. Probably said that wrong too, but I'm trying. But feel free to ask any questions. Don't be shy. And sometimes it's hard to get started. Really interesting time in our industry. We're doing a lot with what's in credit reports and credit scores. Credit scores themselves are changing. The way that you can interact with the credit reporting companies is changing. You're actually getting more control of data. So really important. Navio, I have a creditor actually, because I co-signed for your son. It's a thorn in my side. Okay, part one of the question. I'll wait for the rest. After they've closed the account, can they do anything else to me? So if you're a co-signer, what that means is that contractually, under the terms of the contract with the lender, you share full responsibility for the debt. So that means you're responsible for repayment if your son doesn't pay it. If they close the account, it used to be years ago, and it can still say this on a report, but it used to say closed at the request of the creditor. That statement no longer affects scores in any way. No, it's not really important because people change open and close accounts all the time. But if they closed the account because it wasn't paid, what they really did was probably charged it off as a loss. Depending on the type of account, if it's an installment loan for a car, for example, they might repossess the automobile. If it's an unsecured loan where there's no collateral, they may pursue collections. So they could send it to collections, and a collection agency would then own the debt, and they could attempt to collect it. A student loan. So they may or may not try to collect that. Private student loan, they might, if it's what we call a public student loan or government guaranteed student loan. There's lots of debate going on now about whether those should be collected or not and how they go about it. But contact this, it's always good to work with a student lender. There's usually options that you don't have with other kinds of loans. So it may not be too late, I don't know, to talk to them about what your options are with that student loan, whether it might be consolidation or hardship deferment or forbearance. There's different things that they can do. I used every single one of them with my student loans. So, they'll ask and talk to the lender. Always good to talk to them. But if it's closed and was closed because of lack of payment, because it became in default, that's potentially could still be collected. It will be negative on your credit history as well as your son's because you co-sign. But check your report. It will likely be reported on both. If it's not reported on your report, then you're okay. But probably will be on both. So it's a tough situation. Talk to the lender. They may have some options you could pursue as well. M. Medine, thanks for joining, being part of the chat today. Peaches Smith, good to see you. Thanks for being here. Randy DeParas, thanks for being here as well. Flippo _2019. Filippo, pardon me, or Filippo. Thanks for being here. If I invest in stock in Experian, will my credit score go up and eliminate any negative information on it? Little buddy, no, but it's not a bad stock to invest in. We've been doing pretty well. We're actually traded on the London Stock Exchange. Experian is a British company globally. I work in Experian North America in our U.S. division. So I always make sure people understand that means that your U.S. credit report does not cross national boundaries. So your U.S. credit report does not go to England, and the English credit reports don't come to the United States. So if our employees move, they lose their credit history. And our CEO has an interesting story because he came from the UK to the US, had to start over just like everybody else. So that's important to understand. But we are a British company in terms of global incorporation and business incorporation. Our headquarters are global headquarters in London. We operate in different business aspects in almost 40 countries around the world. Not all credit bureaus. We have other businesses as well. So even in the U.S., we have a business credit reporting operation or business. We have a marketing services business that helps companies identify and connect with customers and share product information, that sort of thing. We have a fraud division that helps companies protect and recover from fraud and ID theft and provide services if something bad happens, like a breach. We have a direct-to-consumer business that has product things like credit monitoring service and those sorts of things. We have an auto history company that competes with the big one that you're probably familiar with. Ours is called AutoCheck. You might check that out, AutoCheck Experian. You can go to autocheck.com and get an auto history report. Our report is actually the National Auto Dealers Association preferred report, or was, I believe it still is. Ours is what the dealers use. So keep that in mind. And you can get your auto history report if you're planning to buy a used car. Really good thing to do. So lots of different things. Investing in our stock might be a financially prudent thing to do. I can't, like everybody says, you can't predict what's going to happen with stocks. They go up and down, and Experian's the same way. So I can't say that you'll, profit from that investment, but it won't affect your credit history or credit scores in any way. It has nothing at all to do with those. So sorry, no, that won't help your credit reports and scores. Jeremy H., thanks for joining. Do student loans always stay in your credit report? No, they don't. They're just like any other installment loan. So if you have a student loan, you pay it off, never been late, it's going to stay in your report 10 years from the paid date, the date it's reported paid, which means we keep the positive information longer than the negative. If you are unable to repay that student loan and you default, it becomes delinquent, it will stay 7 years from the original delinquency date of that student loan debt, and it will come off the report. So it's no different than any other kind of installment loan or delinquency information that we would have in a report. They're treated the same way. Is there any way to remove the hard inquiries when you purchase a car before the 2 years is up? Tisanfo, I'm not sure if I'm saying that right. No, there isn't, but you really don't need to. There's a lot of talk about inquiries and misinformation about inquiries. When it comes to auto loans, particularly for cars, the auto loan inquiries are only counted as one inquiry if they occur usually today within a 30-day period, so within a month. So most of us would shop for a car within a month. And by the newer scores, FICO 8, FICO 9, Vantage Score 3.0 and 4.0, they exclude auto inquiries from the calculation. So when you're buying a car, so they don't affect scores at all. So you don't have to worry about them. The other thing to know is that even though inquiries are on a report for 2 years, it's what the Fair Credit Reporting Act says, we must maintain them for 2 years. Those inquiries only affect scores usually for a couple of months, 2 or 3 months. And the reason is when you first see what we call hard inquiry, an inquiry resulting from your application for credit, it indicates that there's potentially a new debt that doesn't show on the credit report yet. And so it represents a bit of risk. Usually within a couple of months, there will be billing cycles. So 2 or 3 months down the road, there will either be a new account, and that becomes the indicator of risk, and the inquiry doesn't really mean anything anymore. So it's on the report, but isn't affecting scores. Or there isn't a new account, you didn't take that loan, and so it doesn't represent risk, so it doesn't affect scores anymore. So inquiries have the least impact on credit scores of any other information. First thing, so you don't need. So I don't worry about inquiries. Most of us aren't out applying for lots of accounts. So we don't typically see in a credit report. We don't usually see, just a handful of hard inquiries, 2, 3 every 6 months or a year for most people. Soft inquiries, things like pre-screened offers, getting your own report, that sort of thing, a record of when your report's been accessed. We can see 30 or 40 of those, but they only show to you, don't affect scores at all. So the hard inquiries, they're very minimal. The impact goes away within a few months generally. And FICO scores ignore hard inquiries when they reach 12 months old entirely, is what FICO tells me. So they don't affect your scores at all after 12 months. So you don't have to worry about taking them off early. An inquiry is simply a record of someone looking at your report. A hard inquiry is called a hard inquiry for those who don't know or are familiar with that term. It's called a hard inquiry because they're the result of your application for credit, and they represent potential risk because of that potential debt, and they're shown to other lenders for that reason, and they can affect scores a little bit. So that's why they're called hard inquiries. But I don't worry about inquiries. Most people shouldn't. We worry about them, and it's sort of one of those things that all this gray hair that I have these days would come from worrying from about inquiries. So I try not to do that. Let's see. I'm trying to catch up with. So Mark Clay 748-14042. Thanks for joining. Jet Flyer. Thanks for joining. UK Search _Pi. Thanks for being here. Money Dog. Good to see you. And Zapatavello 61. I probably didn't do very well with that, but I tried. Thanks for being here. Little buddy, are auto purchases the fastest depreciating thing you can buy? I don't know if they're the fastest, but they're probably up there pretty high, right? They're one of them. Cars will lose 20% of their value the minute you drive them off the lot, they say, a new car. Ironically, there is, in terms of total debt, auto loan debt is third behind mortgages and student loan debt. I have lots of interesting conversations about the student loan debt piece. I look at student loan this way. Student loans, people with student loans, if you complete that degree and have that degree, people with a college degree, the data all shows that you will typically stand to make $1 million more over the course of your career than a person with just a high school diploma. So if you have, on average, student loan debt's about $35,000. That, to me, if you pay off that student loan debt and the data holds true for you, is an investment in your future. It's actually an appreciating asset. Your student loan, that debt, is used to pay for an education that's going to help you be more financially secure and make more money over the course of your career. So, in terms of the way they rank, mortgage debt, buying a home, need a place to live, you want to own a house, usually an appreciating asset. Not always, they can come down, but usually it's an appreciating asset. Student loan debt, kind of same thing. It's an investment in your future. There are those who were preyed upon, no question, who weren't prepared to be in school by predatory kinds of schools. We need to take care of those folks. But for most of us, if we got a degree, it's a benefit. So that's kind of the way I look at it. So those then you get to auto loans. That's about $1.2 or $3 trillion in debt, and they do nothing but depreciate unless you're buying some sort of classic car or a car that I can't afford. If you're driving like an old Dodge pickup like I do, that's not, it's paid for, so that's a good thing. But they lose value. So when you're looking at cars, I have conversations about student loan debt and what kind of car you're driving with my own kids sometimes. So it's it's kind of interesting, but a lot of debate there, and this is probably not fair on Periscope because I get to do all the talking, but it's an interesting thing. But I think you're right. When you buy a car, if you're buying a new car, and the average new auto loan debt is upwards of $30,000, something close to $33,000 now for a new car loan. Used car loan debt loans today on average are about $20,000 for certified pre-owned cars. So not small amounts, and they do lose value again unless you're buying some sort of classic car or a car that would appreciate, and you don't drive it. That's the other catch usually with classic cars or cars that appreciate, which kind of defeats the purpose. Yeah, I think is the answer. Yes, it's one of the fastest depreciating things. Wombat Prop, thanks for joining. I would add this though: people buy a lot with their credit cards. That's just stuff. So probably goes from it might be a $5 thing, but as soon as you walk out the store, it's absolutely valueless. You couldn't sell it for 20 cents. So, that kind of stuff that we all do too. And I do the same thing. So, there's that kind of thing that you might throw into the mix in terms of how we make borrowing decisions and credit decisions as well. Micah Paris, thanks for joining. Sound System 23, good to be here. I never get a straight answer about how my car's zip code, etc., affect you specifically. Little buddy, from a zip code perspective, doesn't affect credit scores, doesn't affect your borrowing ability, doesn't affect your credit history in any way. And in fact, that's illegal if a lender is using zip code to discriminate on loans. When you get a credit score, the only thing that in fact, zip code doesn't play any part. We're looking at your name, your address, your social. So your address might include a zip code. That's just to match your credit history. Scores do not incorporate identifying information. So they don't include things like zip code in the calculation. They don't include your city, your age, any of those sorts of things. So they're looking at, do you pay your bills on time? Are you managing your debts well? And if so, that's what's reflected in the score. So the straight answer is your zip code doesn't affect credit reports or scores in terms of your ability to qualify for credit. We use the identifying information, including your address, to match your credit history to you, but it's not included in score calculations or lending decisions from using a credit report. But that's a great question, and I hear that from time to time. People are concerned about that, but with us, no. If a lender's looking at your address and saying, "Don't like that zip code," probably I would talk to a lawyer maybe, because that's going to be a legal question and a Fairness in Lending Act question and things like that. It's interesting. And one of the things that I actually was starting to work with, and I hope we continue to work with, a community that actually asked us to provide, and Experian was able to donate data looking at their city and county at the zip code level, looking at average scores, and they're using that to identify underserved communities and communities where economic development should be focused. So they're actually using it not to score individuals, but to look at, and not looking at the individual level, if that makes sense. They're looking at zip code level. What are the average scores for different communities within their city and their county? And so not looking at individual reports, but looking at average scores and using it to identify where they need to focus efforts to improve the financial well-being and financial health of that particular area, and trying to identify what's going on there and how they can encourage small business development and implement financial education programs and those sorts of things. So I think that's a really positive way to use credit histories and scores to help municipalities, so government agencies, private business, and nonprofits focus their efforts to help people gain access to financial tools and resources that'll help them be more financially healthy, help them improve their life. So I think I'm kind of excited about being able to do those kinds of things and use our information that we maintain to help people and to help communities improve. And I think that's a really powerful thing that we can do. Sweet and Lovely too, thanks for joining and being here. Frank Parr, thanks for being here. ENX Tinto, thanks for being here. Maresk, thanks for being here as well. How long will soft inquiries stay on your report? Same thing, 2 years. They remain in the report as a matter of law. The Fair Credit Reporting Act says they'll stay for 2 years. So they're there for a record of who's looked at your report. So you have a complete record of who has accessed the report. And when I say look at, most of them, people don't actually look at the report. So it would be things like pre-screened or what we call pre-approved offers of credit, for example. That's an automated process. So the lender will send us a list of criteria for an offer they want to make and say, here's the kinds of things we're looking for to qualify a person. And can you bounce this off of your credit reporting system and output a mailing list for us? So it happens automatically. Nobody actually looks at the report, except the computers, and it outputs a mailing list. So those are the most common soft inquiries. And like I said, nobody actually looks at it. It might be that you're getting your own report. It could be reviews by your existing lenders. Those are the things that are soft inquiries. And they stay for 2 years. Only you see them. And so they don't affect scores or lending decisions. HJDYKCG, thanks for joining, being part of the chat today. If you're just joining, I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. We have our little logo right there. And this is Credit Chat. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern on Periscope, just to have a conversation and answer the questions you have to help you make sure that you can use your credit report and your credit scores as a financial tool. They should not be a mystery. They shouldn't be something that when you walk into the lender, you're surprised by. You should be able to go into a lender when you're ready to apply for credit, know exactly what they're going to see, know that you're going to qualify because you know how scores work and what scores you should expect. You probably won't see an exact match on the scores, but you would know pretty close to what it's going to be, and be able to use that credit report and score as a financial tool. That's what we want people to do. Lenders want to loan to you. That's how they make money. You want to be able to get the credit you need when you need it. We want to help facilitate that transaction and that opportunity. So that's what it's really all about. Can medical bills go against your report? Sweet and lovely too. Thanks for being here. And medical bills themselves don't. Medical collections can. So if you have a medical bill that you're paying and it's not in collections, it will not be part of a credit report. If you have a medical bill, you're unable to pay that bill, and it's transferred to a medical collection company or internal medical collections, it could be reported. We will hold essentially that medical collection account for 6 months, 180 days before we allow it to be on their credit report, so that we can make sure that it's not the result of a billing error or an insurance dispute, that sort of thing, or a slow pay by an insurer. Actually happened to me. I had a dentist. I went to and had some dental work, and that made the copay. Insurance was covering it. I got a notice from the dentist one day about 3 months later saying it was going to collections, and then the next day I got a notice saying the insurance company paid it. Because we don't, and it should have been paid. We did our part. So directly from experience, we hold that so that we make sure those kinds of things don't happen. Never affected my credit report because that would never have come to the report because we don't allow that for 6 months. So that's why we do it. From Kazakhstan, thanks for joining. Unfortunately, I can't speak to these kinds of issues in your country. I'm in Experian North America in the U.S., and credit reporting and scoring and lending, all of those things are different from nation to nation. It's so different that I can speak to what we do in the U.S. And I don't know if we have operations in Kazakhstan or not. But someone there would have to speak to any questions you have, I'm afraid. But thanks for being here anyway. And Joey Giggles, awesome. Thank you for teeing up Experian Boost. If you're working on improving your credit score, Joey Giggles is referring to a service called Experian Boost. It's been available now for about 9 months. And what it does is it enables you to have your positive, and that's the key, it's the positive cell phone payments and utility payments and things like cable television bills added to your credit report, so that you get credit, terrible pun, but you get credit for paying those bills on time. In the past, you didn't. If you didn't pay a utility bill, if you didn't pay a cell phone bill, it didn't pay a cable bill, they might send those things to collections. They could appear in your credit report and negatively affect your credit. But they're very credit-like. You pay in advance or you get a service and you pay for it afterward. So like credit, you get a loan, you pay for it after you get the loan. With utilities and those, you get the service, you pay for it at the end of each month or at the beginning of the next month. So it's very much like credit. And our research shows that people who are paying those bills on time, particularly if they have a very short credit history, what we call a thin file with just a few accounts, or have scores of 680 or below, are indicators that you should be a good credit risk. And so Experian Boost, if you go to Experian.com/boost, you can give us permission to access the account you pay it through. So a savings account or checking account, find that payment, pull it in each month as an account entry in your credit report, so you get credit for making those payments on time. What we're seeing is people on average, are 2 out of 3 see an improvement, and that improvement's usually 10 to 13 points. If you have a thin file, we're seeing the average increase is about 19 points. So Joey Giggles, you're above average. So congratulations on that, going the right way. So we're hearing great things about it. Again, it's permission based, it's free. There's no cost to do it, and we will give you a free FICO 8 score when you start the process, so you know where you're beginning. We will capture up to 24 months of those payments that you tell us you want to include. So you could see an instant boost, and we'll give you a score once you complete the enrollment to see what's happened. So you get right away, you can see what the improvement is. If you don't see an improvement, you might want to continue because what we think, and we're still learning, because it's only been available for less than a year. But what we're seeing and what our experience says is that even if you don't see a boost right away, if you're including that positive information, it will probably help contribute to an improved score over time. So you don't know, but we'd love to hear, and we love to get feedback. And we're hearing really good things. So give it a look. Let us know how it goes, and we hope that you see a boost because we think it's key to financial inclusion. It's particularly powerful for people who are new immigrants to the country and establishing credit for the first time, young people establishing credit for the first time who haven't had access. And that's important because having a traditional credit history, having access to traditional banking accounts can break that cycle of predatory lending. It can help you gain access to lower cost credit, lower costs for things like leasing an apartment, and the security deposits you would make. Utility deposits might be lower. So actually saves people money and helps them become more financially successful. So that's what we're so excited about. And really want to see happen. And so thank you, Joey, for that and letting us know about it. And I'm glad to see you're seeing improvement. And as always, thanks for teeing up the opportunity to talk about it because it's something I'm really excited about. That may be the biggest change that we've seen in the industry since I've been working for Experian, and I've been with the company more than 22 years. So, giving people the ability to control positive information that's going into the report, that's a huge change. I had 2 collection accounts, all paid off at lower cost. Excellent. Cindy MC7, good. Oh, thanks for saying hi. And hi, good to have you here. What's my opinion of personal loan to consolidate credit card debt? So Keith K42. The answer to every credit question, every credit reporting question is it depends. And I think that's the answer here too. It may be a good thing to do if you can get what we think of as a consolidation loan. And consolidation is a tricky word. You have to be cautious about that in the credit field because there are 2 kinds of consolidation that are talked about. It's what you're talking about is going to a lender, getting one loan that pays off your credit card debt. So if you can get a loan that's at a lower interest rate than your credit card debt, and it pays off that outstanding credit card debt, and results in those accounts being reported as closed and paid, then in full, so zero balance, and then you're able to pay that consolidation loan, that new loan, at a lower interest rate, perhaps over a longer term, but it's a lower payment, for example. And see that often with student loans. I did that. I consolidated my student loans. It meant I had a longer term to pay it over, but my interest rate was a bit lower, and it resulted in a lower payment that I could manage at the time when I was working in a newspaper, making almost nothing. And now I make a little more than nothing. I was able to manage those payments and keep my credit report intact, which I knew very little about then. So a consolidation loan in that sense can be helpful if it helps you make those payments on time and continue to manage your credit history. The other kind of debt consolidation that you need to be a bit cautious about are firms that will say contact us, pay us, and we'll do debt consolidation for you. And what they are often talking about is really debt settlement. So they will go to your lenders, negotiate for repayment at a lower rate or lower terms, or lower principal. And as a result, those accounts are reported as settled, not paid, but settled in your credit report. That's going to be negative. Even more concerning is that many of those companies will tell you to stop paying on those accounts, which means your accounts become delinquent or late, which then hurts your scores even more. And the reason they'll do that is so that if they're late, they can negotiate more easily with those creditors and say, hey, they're not paying the account. You want to get any money back, lower those rates. The problem is you are destroying your credit history, and it's going to take years to recover. So the question is that something you want to do? Debt settlement isn't in every case a bad thing. If it's a last resort, and there are great organizations that you can work with that can work with your lenders The National Foundation for Credit Counseling, for example, is a nonprofit organization that has member organizations around the country, and they work with lenders on what they call debt management plans. But they will never tell you to do that first. They'll look at your overall financial situation. They're nonprofit. They'll look at options for repaying before they'll negotiate debt settlement and make sure it's the right thing for you to do. Paying for a quick fix often results in more damage than it does good. So be careful about the term consolidation. Make sure you understand what it is and it's the right thing for you to do. Again, debt settlement isn't always the wrong thing. It just make sure it's the right thing for you, and that if there are options, it's usually better to be able to pay those debts on time. And if anybody tells you should stop paying on something, I would be extraordinarily careful, because that's going to put you in a worse place very quickly than you already are. So be cautious about that. Romper, thanks for joining. God's Daughter 2, thanks for being here. Live It Up 4x, thanks for 4X, thanks for being here as well. Mark J24. So we kind of talked about consolidating credit card debt. If you get a loan and pay them off, that can be a really positive thing to do. But be cautious. Always know what the terms are. Always make sure you understand what you're agreeing to as well. So thank you for all the great questions. If you're just joining, I'm Rod Griffin, Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I'm here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays to answer your questions about credit reports and credit scores and fraud and ID theft, all of those things. Thank you all so much for the great questions today. We also have a Twitter chat every Wednesday, 2 o'clock Central, 3 o'clock Eastern, and we'll be talking about New Year's resolutions around credit and finance and personal finances next Wednesday. So hope to see you there. And I have it on good authority from my colleague who runs the tweet chat that he's going to be live on Christmas Day if you want to join us then too. So I guess I'll be trying to tweet in too. So hope to see you there. Again, thanks for all of the fantastic questions and all of the great dialogue. The best thing we can do is share with one another and share information to help each other be more successful. So it's good for me to hear what's working for you. It's good for me to hear things that are difficult. I actually talk to our executives and our leadership and share the information you bring too. So I really appreciate that. Thanks for being here. Thanks for all the great questions. I hope you all have a wonderful holiday season. I plan to be here next Tuesday. I'm going to be traveling next Thursday, so I won't be able to make it. But I hope if I don't talk to you again, have a wonderful Christmas season and holiday season. And I hope to talk to you all very soon. Take care, everybody.